When you look at the majority of ERP implementation, they could be all over the place. Some vendors, when they claim, it could be as simple as setup, while the other projects could be as large as business transformation. So, what are different maturity stages of ERP implementation? That's what we are going to discuss in this video. Hello everyone, my name is Sam Gupta. I am principal at Elevate IQ. Elevate IQ is the independent ERP and digital transformation consulting firm. We help our clients with the technology strategy to your discovery, to your implementation phase, and making sure that they are going to get business value from their enterprise business transformation initiatives. On that note, let's go back to today's topic, which is going to be the ERP maturity stages for companies in 2023. With ERP implementation, even though most companies would like to be as mature as possible with the ERP implementation, but typically the major barrier with ERP implementation are going to be their internal skill set. It's just the way the maturity cycle works, and it takes a while before you can get the business results from the ERP systems. Initially, when you are going to start, it's probably going to be very transactional in nature. Slowly and gradually, as you hire more expertise, the executives that have done a lot of implementations, you are going to gain more maturity. So now let's review the stages. Now, the stage 0 on our list is the outsourced accounting. And this is probably the first stage that most companies are going to be on. Sometimes the companies are going to claim that they have the ERP system. There is also a misunderstanding in the market that some accounting firms, CPA firms, they are going to assume that the ERP system is all about doing the accounting. And even when you look at the accounting practices, there are so many different ways of doing the accounting, whether it is going to be fully automated or not automated. Even in the automated scenarios, there are many different ways of how you are going to automate and what level of financial control you are going to get and how much reconciliation you are going to require with each of the processes. So all of these things vary. So at this stage 0, the typical architecture that you are looking at more from the process perspective as well as from the system perspective. So at this stage, the accounting firm is primarily responsible for the accounting, and the founder, they might not have as deep expertise with the accounting or supply chain or the operations management. They might not have a CFO, controller, CIO, or chief supply chain officer. So what they are going to do is they are going to send the bills, the invoices, the statements, and the accountants are going to be keeping the books. So because of the disconnected state, meaning the accounting system is completely outside of the control, and these accounting firms don't even share what is happening in the books. I mean, the only thing they are going to do is they are probably going to be publishing the report. So executives don't really know how those reports are published, and if they need to sort of play any sort of scenarios, obviously they can go back to the accounting firm and they can help with the reporting or the customized reporting that the executives might need. But overall, the executives are playing in the dark because they don't have this insight internally, and the disconnected state also result in higher accounting fee in general. So the pros of this is going to be, obviously it is easy. You don't require experts internally to be able to model your data, to be able to model your SKUs, customers, vendors. So you don't require as the finance, supply chain, IT expertise internally, and that's why it is friendly for these startups. Now, the cons of this particular stage is going to be, there's going to be very limited traceability across the transactions. You just don't know what is happening in your operations. And then the substantial admin efforts is going to be required in the backend processes, meaning reconciling the ledgers. And there are going to be data quality as well as the financial control issues just because of the disconnected stage. So that's stage 0. Now, stage 1 on our list is the assumed ERP. And again, this is similar to your stage 0. The only difference in this stage is going to be that you are hosting the accounting system internally. This is still not the ERP system. This is only the accounting system that these companies might be using. But rather than utilizing an external accounting firm, you are managing it internally. At this stage, you might have an accounting manager or the controller who might be maintaining the books internally, most likely in either QuickBooks or Sage 50 or Zero, these platforms. And what they are going to do is they are going to use a lot of add-ons on top of these systems to be able to get the operation. And sometimes the architecture could be very similar. The only difference between this particular architecture and the stage 0 is going to be that you might not need to do as much data entry, meaning you can send your bills, invoices to your accounting system automatically using the APIs. But overall, the data modeling is not necessarily done. The item may not be modeled. The customer may be modeled, but they might have the raw GL code sprinkled everywhere. So the training is going to be an issue because the operations folks that you are going to hire, they might not be comfortable looking at the GL codes. So the pros and cons for the stage 1 is going to be very similar to stage 0, with the only difference is that you might have some level of traceability just because the accounting system is managed internally. So that's stage 1. Now, stage 2 is going to be transactional, and a large majority of the ERP system installations are probably going to be in this state. The stage 0 or stage 1, they are going to be companies when they are going to be roughly 0 to $10 million in revenue. Sometimes the stage 1 companies might say up to $30 million in revenue, depending upon which industry you are talking about. Sometimes it could be higher in revenue if the transaction volume may not be as high. Now, the transactional state, if you are going to be operating in your stage 0 or stage 1, typically the number of variances that you are going to get, the amount of reconciliation that you need to do in the backend, the amount of bookkeeping that you are going to require forces companies to use slightly more integrated systems, integrated processes, and that's where the ERP systems are going to be handy. The overall intent of the ERP system is going to be to automate all your monotonous accounting processes, the monotonous procurement processes, so that you can spend your time with the analysis as well as the value-added activities. So in this particular stage, the expertise that is required to model the data as well as to model the processes to be able to get the results might not be there with the companies, and that's why they remain in the transactional state. When they are going to implement the ERP for the first time, they are most likely going to be confused just because there's so much noise in the market. Everybody's going to claim that, you can implement an ERP in $30,000, $40,000, sometimes $100,000. But typically, these ERP implementation vendors or the projects assume that you are going to be doing the major heavy lifting, meaning you are going to be responsible for the data as well as the process translation. And even if they might be capable of doing that, but since you are setting a hard budget for the project, they are not going to be able to spend as much time. So this becomes more of the technical ERP implementation where you can easily process your transactions, but you might not get the business results. In fact, with this ERP implementation, your overall workload might increase. So you installed an ERP in the hope of reducing the manual effort, but in this particular case, the overall effort might be increased. The reason for that is because you have not done the analysis, the process simplification, the data simplification. And if you don't do that, you are not going to get business results. So at this stage, typically CFO or controller might be in place. These implementations are typically driven by your finance CFO. They might not have as deep understanding of sales and marketing and operations and supply chain. and sometimes they might implement the ERP from the financial perspective just because they only care for the financial reporting, the financial traceability, but that is not going to be enough for your supply chain folks to be able to get the operational synergies, to be able to get the operational benefits, or to be able to get the sales reporting that your sales team or marketing teams are going to be looking for. So this is a very raw implementation that is going to be in transactional mode. The pros of this is still going to be it's a very easy implementation just because you are not spending as much time in analyzing your data, in translating your data, in translating your processes the way you would translate if you, let's say, were to model your financial KPIs as well as the financial processes the way they should be modeled in a tightly knit ERP system. The cons of this is still going to be the traceability, just because the processes might not be as connected. You might have the master data issues because you have installed this more in the siloed manner, so you didn't worry about the integration. Probably you thought that, once I install the ERP, then I can figure out the other integration points. So you are going to have a lot of data quality issues. You might have the reconciliation issues. You might not have as much visibility into the inventory. You might have the problems with respect to the supply chain processes as well. So that's number two. Now, stage three is going to be automated customer and vendor communication. And typically, stage three is going to be on priority once you install the ERP system. Your customers might be demanding the automated communication. So let's say if you are trying to win larger accounts and they are looking for your company to be integrated with their systems, then they are going to enforce this on you. So typically, most companies, the approach that they are going to take is they might have, let's say, the e-commerce system such as your Shopify, BigCommerce. They might be utilizing the point-to-point integration that are going to be plug and play from the SaaS perspective in these e-commerce apps, or they might use EDI. But the overall architecture is driven primarily from the external touch points. The architecture has not been analyzed comprehensively. So what is going to happen with this approach is you are going to get the communication, the front end communication with your customers, but you are going to get a lot more issues in the back end because you are simply prioritizing the front end perspective. You are not worried about the implications that you are going to get in the back end processes. And sometimes, again, because of this biased approach, your effort in the backend might increase. Let's say you are using the standard costing. So standard costing allows you to simplify your front-end processes, but then you are going to get a lot more variances and the reconciliation flows in the backend. The same thing goes for the integration of different apps. So for example, let's say if you are going to use these point-to-point integration in the front-end systems, then you are going to get a lot more master data issues because you don't have clear source of authority of different systems across the processes as well as the data set. So you are going to get significant issues and your overall workload might still be increased even though you are able to process your transactions inside the system. You are not able to do the scheduling, costing, the higher value processes inside the ERP system. So that was stage three, and that is automated customer and vendor communication. Now, stage four on our list is going to be departmental level planning. And as the company grows in its life cycle, once you have these customer centric workflows figured out, then the next thing is going to be workload is going to increase significantly. So your executives are going to push for the KPIs, and to meet those KPIs, you might be required to do the planning inside the ERP system, because once you take out the data, it might require a lot more effort. So there might be a push overall, and this could be a self push just because the workload may increase and you are looking for ways in which you can simplify the processes or reduce the workload. So the next thing you are going to do is you are going to figure out, okay, how can I plan this inside the ERP system? So in this particular state as well, you are going to have many different ERP systems at the department level, but typically the departments are not going to be integrated. Sometimes you are going to be using the best of breed systems for the departmental level planning, but since the executive team does not really have as much experience in aligning different functions and building that master data that is going to be the fabric for your organization, you might still not be able to do the joint planning, joint forecasting at the site level. So this is a very siloed approach in general, but at least in this stage, you will be able to do the departmental level planning. You might use an FP&A software to do the consolidation to make sure that you are able to report if you are going to have multiple entities, multiple departments in different geographies. So that is the stage 4. Now, the stage 5 on our list is the site level planning. And once you grow after the departmental level planning, then at this point of time, you are going to have decent transaction volume and you are going to outgrow the department level planning. So your executives are going to push either there is going to be a change in the executive team just because you are not able to meet the finance expectations of the shareholders. So they are probably going to hire somebody who has experience in implementing an ERP that is going to be slightly tight knit overall from the department perspective, or at least the sites might be able to operate independently. So at this stage, you are going to have far more expertise internally in modeling the data, in influencing the teams, how the data need to be modeled, how the items need to be modeled, how bombs need to be modeled, how customers need to be structured to get the insight that you are looking for MRP planning to work, for your costing to work, so that you don't get as many variances, so that your front end and back end processes are going to be one to one without much reconciliation effort. So this is going to be a comprehensive analysis that requires far more consulting effort. It requires far deeper internal expertise as well. But even in this case, you might have multiple ERP systems across different sites because the executive team that you might have, the way they may have designed the compensation structure, they might not be worried about the operational synergies globally or the financial synergies globally, or you might be smaller enough that you don't have to worry about the global synergies. So the companies are still going to be focusing on the site level planning. So that's stage 5. Now, once you get to stage 6, this is the stage where you are doing the consolidated multi-entity planning. And in this stage, the site level planning is not going to be enough, because if you don't explore the synergies between the sites, whether it is going to be financial or operational synergies, you are going to have the financial performance issues just because of the amount of effort required in the backend processes to be able to reconcile, to be able to translate. So at this stage, you need to plan comprehensively across all of these sites. You need to have a fabric that is agreed upon across all of the sites, and you can operate on the shared information model, the shared data model, whether you talk about different products, customer list, vendor list, chart of accounts. All of these need to be synergized and agreed upon across the entities. So at this stage, there are going to be some executive changes who might have 3 or 4 ERP implementations under their belt. They might have some experience with the global ERP implementation as well, in aligning the groups, in figuring out these synergies. And that is far more complicated than you would think. And the majority of the time, if your internal team is not going to have the expertise, you will not be able to do that, just because they might not be able to see the benefits. They might not appreciate the benefits. So that's stage 6. Now, stage 7 on our list is the joint planning and forecasting or shared services. So this is the next stage. Once you have figured out your consolidated multi-entity planning, then the next stage that you are trying to figure out, especially the companies that are going to be much deeper in the supply chain processes, and even if they are not going to be deep in the supply chain processes, they still have to figure out the operational synergies, especially from the procurement perspective, or the financial synergies from the shared services perspective. So in this particular case, you are implementing many different processes. For example, let's say you might not have an ASN or the license plate processes, because these processes are going to allow you to operate in synergy with your customers as well as the vendor ecosystem. So you are creating the processes as well as the hooks in your operational model, in your supply chain model, so that you can get data from your customers as well as from your suppliers. And that data is going to help you in the planning together as part of one supply chain, and that is going to minimize the number of disruptions across the supply chain because of the unpredictability of your customer as well as the vendor processes. So this is probably going to be the next stage. Once you have done the multi-entity consolidated planning, this is going to be slightly more external factors that is going to drive your supply chain planning. The next thing is also the shared services model. So let's say if you are trying to combine, consolidate, outsource the shared services model to countries where the processing of, let's say, invoices are going to be cheaper. Typically, this is going to be when companies are going to be, let's say, over $1 billion in revenue. That's when they need to figure out, okay, how can they utilize some of these financial synergies available globally? So they might be doing this more from the operations perspective. They might also be doing this from the financial perspective. And this requires designing the architecture that is going to be aligned with the shared services model, that is going to allow you to collect data from your customers and vendors. And you cannot do that unless you have the data model alignment across the whole supply chain. So this requires comprehensive thinking, and that's a very deep expertise, and that's where you are going to require a lot more consulting expertise as well as your internal IT expertise to be able to execute on this particular stage. The advantage of this particular model is going to be the predictive forecasting opportunities because of the shared data. And in this particular model, the con is going to be that training and learning opportunities are still not capitalized in terms of the preferences of the user, what they are going to like in the system, even though you are going to get these synergies financially and operationally, but still the training and learning and the human behavior opportunities are not capitalized on this model. But that is number 7. Now, number 8 on our list is going to be the enterprise architecture or best of breed implementations. And typically these implementations are led by the CIO once you have CIO in place. And in the stages, let's say if you are going to be on number 3 or 5, typically the CIO who is going to be there, the CIO might not be as seasoned, or you might have a developer who might be acting like a CIO, but they don't really have as much experience under their belt. So this is the stage when you are going to hire a very seasoned CIO. Either the CIO is going to be brought in by your private equity or the management. So in this implementation, all of your technical issues are most likely going to be resolved because the IT and the CIOs are going to take that perspective. They are going to be looking at the whole enterprise architecture, how different systems are going to be connected with each other. It is not just going to be your ERP system, it's going to be the other systems. For example, let's say if you have HCM, CRM, e-commerce, the P2P systems in your architecture. So how are these systems going to talk to each other? What is going to be the process boundaries of each of the system? How can we minimize the reconciliation effort between the system by aligning the master data of different systems? So they are looking at the comprehensive picture, the way they are designing this architecture. And this architecture is going to allow you to have agility in your business model when you are going to be on fast M&A cycle where your business model is likely to change. So you need an architecture that can accommodate many different systems, many different processes, many different business models. So they are looking at this very comprehensively and designing an architecture that is going to allow you to scale. The challenge with this particular model is going to be it requires much deeper IT capabilities internally as well as the consulting support. So that's number 8. Now, number 9 is the final ERP implementation stage, and it is called Decision Support System and AI Augmented Workflows. So when you have the enterprise architecture, the best of breed architecture, in most cases, they are going to focus only on the operational workflows. They are going to focus on the transactional workflows. They are not as worried about the data-centric workflows, and that is going to be the next stage. Once you have your foundation set, then the next stage is going to be, okay, how can I realign my future forecasting or the data layer, and the data layer is going to be on top of the transactional or the operational repository that you are going to have. That is ensuring your financial and operational and the transactional integrity. But the data layer is going to be the study phase where you can accumulate data from many different sources. You can build data science layer. You can have the AI augmented workflows where you are going to be doing a lot of computation. You are going to be learning, okay, what is happening? Some of the examples could be, let's say you need to optimize your revenue because you don't have enough data, you don't have enough infrastructure to be able to compute these what if scenarios to understand, okay, let's say if you change one variable, how is that going to impact your revenue? So some of this could be, okay, let's say from the operational perspective, if you are going to change one packaging type, or let's say if you are sort of segmenting the operations on your shop floor, how is that going to impact your financials? So all of those what if scenarios are most likely going to be done in your data layer, and that's where the study is happening, and the data science layer is going to sit on top of your underlying layer. So that's where this stage is going to be handy. Now in this particular case, you are going to require a lot of deep data science expertise as well as the IT expertise and the consulting support. So for the most part, this particular stage is going to be available only for the enterprises who have deep pockets to be able to spend on the IT architecture. And if you don't have the enterprise architecture expertise, if you try to get to this stage without having that deep IT expertise, you might not get the results. Your ERP implementation is likely to fail. So that's it for this video. And in this video, we spoke about different maturity stages for your ERP implementation. If you enjoyed this video, we are going to include the detailed article as part of this video, so you might want to check that out. This podcast is also available in the audio form on Apple, Spotify, or Google, so you might want to check that and subscribe there. We publish these videos on a weekly basis, so hit the subscribe button if you like on YouTube. And if you have not checked our digital transformation report for 2023, we are going to include the link. So check that out. On that note, thanks everyone for tuning in. I'll see you in the next one.